Hello, everybody, and welcome to this webinar tonight. I am very excited about tonight's webinar, and I love the topic. But before I do go any further, I do need to make sure that I am coming through loud and clear. So as always, make sure you jump into the comments, let us know, say hello, let us know where you're joining from today. Always great to hear from you guys. I do actually have the comments just down to my left here, and I can see them all coming through. So lovely to see comments there from Carol, Therese, Christina, and CJ. Nice to have you after having a bit of a chat today as well. So awesome to have you guys all joining us today. And like I said before, very excited about today's topic because I believe it's got a real meaning to me, in that opportunity to buy that first investment property and the life-changing situation that can come from buying that first investment property. Anyway, my name is Jono, and I will be presenting the webinar for you today on behalf of Wealth Mentor. The great thing as well is I do have a lot of our team over in the chat. So as you guys are commenting or have any questions, the team will be there to answer any questions. And I also have the team in the background who will be the tech team handling everything for me. So I can just sit here and give you guys as much information as possible. Right, I think it's time to rip into it. Tech team, can you bring up the slides, please? Let's go through what we are going to be covering off today. So first of all, the topics for today. We're going to be going through the key numbers in terms of establishing whether the investment property is right for you. Now, in terms of that, there's terminology that you're going to come about when you go through and actually jumping into investing in properties, and I'll cover off a whole bunch of that. I'll talk about the different strategies, because different strategies are going to fit for different folks, and also understanding what strategy is going to be best for you guys. And the one I'm most excited about talking and sharing with you guys today is the concept of using equity to buy investment properties. The concept of having equity in a home and being able to buy and invest property. I'm also going to give you an example of a cash flow property. I've got a great guest joining me later for about a quick few-minute chat on his latest deal. And I'm going to show you then how we go about buying the next property, the next property, the next property, and how you should really continue your education in being the best version of yourself when it comes to being a property investor. Now, I've got an hour. I wish I had a few days to be able to rip into all the content, but I have an hour, so let's get into it. And before I do go any further, quick little bit about Wealth Mentor. So Wealth Mentor is a company. We're based in Parnell. It has been providing financial education mainly in the property space for over a decade now. So there is so much experience. We've had thousands of students go through our programs, and to be fair, the proof is in the media. When you have a look at all the awesome articles about our students getting out there and achieving unbelievable success. We are by no stretch of imagination, I think, the most trusted property educators in Australasia. And you know, the best part about it is we're all about education. We're all about giving you guys as much knowledge as possible so you can become the educated investor and make decisions on what property is right for you. Wealth Mentor will not sell your property. That is something we are adamant about. We will teach you how to buy the right property, but we don't sell your property and make a kickback from that, because that is not about you. That's about the educator. We're all about making sure you guys are buying the right property. Please take note of the tagline that we have there on the Wealth Mentor logo: making wealth accessible to all. This is something I'm truly, truly passionate about, because this is a tagline that has come in since I've taken over as managing director of Wealth Mentor, and it's all about being able to educate and bring wealth to everybody. And I'll get into a bit more about wealth soon and what that means to everybody. A little bit about myself. Better have a sip of my tea before we go any further. Number one for me is I'm a family man. I believe everything I do is about my family and trying to create the best opportunity for my family. Please, if you relate, if for you, jumping on this webinar is about creating the best opportunity for your family, love to hear from you. I can see the comments coming through. Nice haircut. Thanks, Christina. I did go and get this haircut done about 2 hours ago. It is brilliant that we're out of the no barber situation and we can go and get a haircut here in Auckland, which is really, really exciting. Interesting fact about me, my first investment property was actually on a reality TV show where I made a bit of a fool of myself on national television. If you ever get the opportunity, please don't ever watch Our First Home, because besides the last episodes where we won the program, I really did make a fool of myself trying to be a builder for a while. I am the managing director of Wealth Mentor. It's a huge honor to have that role. And it's a huge honor because my education starts just like you guys today. My education started with a webinar, learning more about Wealth Mentor, learning about the fact that how to become a professional investor, and then going on to going, well, you know what, I can be a mentor. I can then take on and purchase the whole company and be able to change so many other people's lives. So it's been a hell of a ride, but yeah, it is something I really am super, super proud of. Obviously, experienced investor and a mentor, it's something I take great pride in, being able to help so many people with their investing. And I can't wait to be able to help you guys today. And lastly, I'm a big sports fan. For those of you that know me, I'm all about my sport. I love actually a tennis background. I coached tennis for many years prior to getting into property investing, and then went on and still play a lot of golf, fly fishing, and a bit of cricket. So my wife loves it because literally I think all the sports that I choose are half a day sort of sports, sometimes even full days. But that's a little bit about me. I got a question for you guys. My question is, what does wealth mean to you? What does wealth mean to you? For those of you that have ever caught any of the show that I do called Coffee Catch-Ups, which we run every Tuesday and Thursday, it's a question I get to ask all my guests. Because when you understand what wealth is to you, it doesn't have to be about those nice cars. It doesn't have to be about the fancy watches that we have there. What does wealth mean to you is all about figuring out what can you do to create your best life. Wealth for every individual is different. Once you establish what wealth is to you, it's going to give you the ability to understand the goals, understand the process, and understand the plan to achieve those financial goals so you can live the life that you deserve. For me, wealth, obviously about my family, it is a big part of it. Fly fishing there, the experience of being out, my kids, and in the top right corner there, I absolutely love educating. That photo there is actually taken from our offices in Parnell, where we have a full studio, which is where we bring our events from. Today, I'm coming to you from my house. I live out East Auckland, and I'm joining you today from home, but our events are run out of the office at our full studio. You can see all soundproofed, some pretty awesome cameras that we have in there. Awesome. Now, let's get into the first question I have for you guys. Now, the question I do have for you, make sure you jump in the chat. Do you currently own a property? Do you currently own property? Now, it could be one, it could be a home, it could be that you've got yourself some investment properties. Jump in the chat and pop in there if you are in that space. If it is that you're looking to buy your first one, please, I'd love to hear that as well. Let me know in the chat so I understand exactly who is joining me today, so I can make sure that we cover off all the elements. But who out there actually owns property currently? And if you do own that property currently, what has been happening in the property market over the last year, 2 years, 3 years? We've seen some phenomenal growth within the market in New Zealand or in Australia, for those of you that are joining from over the ditch. The great thing about this growth is that it gives us the ability to use equity created. Now, I'm going to tell you something that I'm going to explain a little bit later on, because when we buy property, we actually don't buy property for growth. That's right, we do not buy property for growth. But the fact that we've had some significant growth over the last few years has meant that it's given the ability for those individuals with homes or investment properties to create extra equity. So what is equity? Equity, put very simply, is the difference between how much you owe on a property, your mortgage, and how much the property is worth. So it's all very well having equity, but let's have a look at what has actually been happening with that equity in the last 12 months. We can have a look, and I realize that that's probably a bit small for you to see. So I have zoomed in on a couple of the key numbers that I would like to touch on. First of all, the national median price is up 23.4%. That is exceptionally high. We are seeing huge growth over the country. If we zoom in on a couple of the areas, I know that there is a little bit hazy there. I apologize for that. Manawatu Wanganui at 28%. We've got the Hawke's Bay at 30. I can't quite see that either. It's 30. Let me give you the exact number. 37%. And then if we have a look further north, we got Northland up at 19, Auckland at 25%. So if you have owned a property over the last year, you're going to have seen growth in that property, creating more equity. So now I would like to explain to you how we can actually use that equity in order to buy more properties. So I've broken down some numbers, and let's go through this nice and slowly so I make sure that you guys understand the fundamentals when it comes to how we use equity and the concept of equity versus usable equity. So first of all, let's have a look at a property, an example. You've owned a property, and that property was purchased for $650,000. Right, now in that situation, for owner occupied, we generally find that properties are given a loan to value ratio. That loan to value ratio is how much the lender is willing to lend you based on the value of the property, willing to lend you about 80% to the value of the property, which means you're going to have put in about a $130,000 deposit. That $130,000 deposit means that you're lending $520,000 to buy the asset, the property worth $650,000. Now, like I said, we've had 25% growth over the country pretty much over the last year. So if you own a property over the last few years, 25% would be a fairly cautious assumption. So if we take that 650 and we add 25% onto it, we now have a property that's worth $812,000. 500 for those of you that want to be precise. So taking that property that has grown by 20%, we now have a property that's worth 812, but we still have a mortgage. I'm saying here in the situation that you haven't actually paid down any of the mortgage. So you still have a mortgage on the property of $520,000. This means that you essentially have, coming back to what I explained before, equity being the difference between how much you owe on the property and how much it's worth, meaning that you're going to have equity of just under $300,000 in this property. But what we need to look at is what equity can we actually use, the usable equity. In this case, we now need to look at how much we can now borrow against the property based on its new value. The property is now worth $812,500, meaning we can borrow 80% of that based on it being our own occupied against the property. So we now can borrow $650,000 against the property, but we only owe $520,000. The difference being our usable equity. The difference being our usable equity. And this usable equity right now is sitting in our property, not being used if you are not leveraging it into another property. Now, leverage is a key term that we use within property. Understanding the power of leverage is essential in terms of being able to take the property, take the usable equity, the equity that you've created, and leverage that into another property. Let's have a look at what that means. Basically, taking that usable equity and using that as our deposit. So now the lender, whether it's a bank, whether it's a non-bank lender, whether it's an asset-based lender, different lenders for different folk, for different strategies, will take that $130,000 and take that as the deposit. Now, loan to value ratios for investment properties range from 60 to 90%, depending on the lender that we go for, depending on the strategy, depending on the strength of the deal. So taking that $130,000 as the deposit actually means that we can go out there and buy another property for $325,000 with putting no extra money into the deal. This is the concept of leveraging usable equity. This is 101 in terms of being able to buy that first investment property. Because even if you don't own a property, that equity does not have to be yours. That's right. That equity that you leverage does not have to be yours. And this is why we always say that within real estate, you need someone's money to buy a property, but you don't necessarily need yours. And that money could be equity. I'll definitely touch on that in a bit more detail going forward, but it's essential to understand that the fact is that when you leverage that equity, it gives you the ability to buy another property without actually having to put in any more money. And again, we've seen incredible growth. But the funny thing is the Wealth Mentor top tip. Buy as if property prices will never increase. Buy property as though the price will never increase. But that's funny because we're always taught about this concept of buying property and then waiting for the growth. What about if we can control the growth? What if we have the ability to force appreciation? And what about if we're not buying for growth, but we're buying for the income that the property is going to generate? We're buying for the ability to have a property that is going to put money into our bank account every week, every month, every year, instead of us having to pay into a mortgage. The mortgage is actually paying us, and we're creating what we call cash flow. And that is a key concept that I'm going to talk about today. This all comes back down to cash flow mastery. And for any of you that have ever read any of the Rich Dad Poor Dad stuff or seen any of the Rich Dad Poor Dad concepts, make sure you check it out. Robert Kiyosaki. When Robert Kiyosaki rolled out his Rich Dad program in Australasia, it was actually Wealth Mentor that facilitated all the education in terms of their mentorship program. And the principles are so powerful. Right, before I go any further, later on in this webinar, I am going to be offering you the opportunity to join us at one of our events. Like I showed you before, we run our events from the studio in Parnell. Now, the Cash Flow Masterclass that I will be sharing with you guys later on in this webinar is going to be in December. And to be honest with you, I'm going to be sharing with you a price for the 3-day Cash Flow Masterclass that's probably going to blow your mind. It's probably, I have been questioned by the staff. I have been questioned by some of the mentors as to why it is so damn cheap, but we are going to be offering it at that price. So make sure you hang around, and I can't wait to be able to share that with you later on. But you guys are here to learn, and I want to teach as much as possible. So what I'm going to do is I'm going to go and take you guys through some of the key numbers to understand, the key fundamentals that you want to understand when buying that first property. And I've mentioned this word before, but it's all about cash flow. It's all about the ability to go buy property that the income far outweighs the expenses. Thus meaning that every month, every week, every year, we're putting cash flow and profit into our bank account. Now, the key element when understanding cash flow is to make sure that you are taking every single expense off your calculation. Because one thing that really grinds my gears is when you see these ads on Facebook, cash flow property. But what they're saying is if you buy this property with no lending, it is still going to cash flow for you. But what about if you could borrow all the money for the property? Like I showed you before, leveraging equity will mean that you've borrowed all the money for the property. If you could borrow all the money for the property and still create an income at the back end of it, this here is the key to cash flow. And it's very, very important. Let me run through the cash flow calculation for you guys. If you've got some properties, make sure you run this for some of your properties and you make sure that you are creating that income. But basic cash flow when it comes to business, when it comes to property, is your income less expenses is going to give you actual cash flow. So what are our income? Well, our income is our rent. Obviously, the tenants are living in our property and paying rent to live in that property. So now what we want to do is we want to look to take off all the expenses in terms of the cash flow calculation. Now, for those of you that are quick, jump in the chat and actually see if you can beat me to some of the things that you're going to make sure that you take off in terms of expenses. Let's see if we can get those fingers working. But the first one, and the most important one, because I've already mentioned it, is the interest on our lending. We want to take off the cost of borrowing the money to purchase the property. So you've got your income, less your interest. Right, now what else are we going to need to take off this property? The next one that we're going to have to jump off is our monthly operating expenses. Our monthly operating expenses, otherwise known as MO. The man who lives under your stairs, that takes things like insurance, takes things like your rates, takes things like our maintenance expenses. So thank you very much, CJ. That's correct. Jumping in and taking off our MO, our monthly operating expenses. And yes, I can see there that you've got, CJ, in there, the management fees. Absolutely. You are going to be running your property like a business. You're going to have a property manager managing your property. Because you're not necessarily going to be buying properties that you can drive past on your way to work. because that does not necessarily mean it's a good property if you can drive past it on the way to work. My portfolio is based mainly through Wanganui, Manawatu, and through Hawke's Bay and in Auckland. The Auckland stuff, I have property managers managing that. I'm not willing to go and handle that. It's important to run your property business like a business, so you got your property managers running that. So once we take off all these expenses, what we're left with at the end of the day is our cash flow. Our income less our expenses equals our cash flow. I'd like to show you a deal now that was purchased just in September and show you an example of how that actually looks on a real life deal. So this property here, purchased in September, was purchased for $335,000. Now, the purchase of this property was actually a number of units, and I've taken one of them to give you guys an example of how it stacks up. Purchased for $335,000 and a $5,000 reno to get it up to healthy home standards and to market rent. We're getting a rental of $420 per week. All right, so there we have $1,820. We're taking off our interest expense, which is going to be $472. Our monthly operating expenses of $182, that's worked off at 10%, and also our management worked off at 10% to give us our monthly cash flow. We always work off monthly cash flows because it aligns with income statements from property managers and running our company with our monthly reporting, in terms of how efficient your property is working for you. And this property here, when you take off all expenses, is creating almost $1,000 per month of extra income. That's $12,000 a year of income in your back pocket after every expense on a $335,000 property. Now, if we take a step back and we have a look at that property that I showed you earlier in this webinar, that property, by having the growth that we've seen, leveraging the equity created, which was fairly conservative, we were able to actually go out there and buy a property for $330,000. You could have essentially bought this property, creating yourself an extra $12,000 of income. Now, one of the questions that might be out there is, well, what about taxes? My answer to that has got a couple of elements to it. First of all, worry about making money before you worry about paying taxes. Secondly, yes, you are going to have to pay taxes. We're running an income. You're running a business. You're going to pay taxes. Depending on how you structure yourself, and something we go through in a lot of detail at the Cash Flow Masterclass, we actually spend an hour on tax. We bring in a tax specialist to talk it through. I interview him so I can make sure I can bring it back down to normal terms for us average folk who are not accountants. But what we end up doing is we work out how we can best structure you in order to be the most tax efficient. I love throwing this out because it always flabbergasts people. But my goal every year, at the end of each year, doing the tax return, I want to pay as much damn tax as possible. Because you know what? That means that I'm making as much money as possible for my business. And that's what it is about when you get out there and start to grow your income from your property. Awesome. I hope that makes a lot of sense. Great comment there from CJ in term saying, wow, yeah, absolutely. A brilliant investment, this one. Now, the funny thing as well is the other question we get a lot is, well, what about vacancy? I don't know if you realize this currently, but the whole of New Zealand is on a massive shortage of property. Do you know that the vacancy rate is about 0.4%? So less than half a percentage is the vacancy rate. So it's in the day, if you can't rent out your property, there's something seriously wrong with the situation. You should be able to not have to worry about vacancies. And at the end of the day, you're putting together the best possible property we can, because you want to put forward an awesome property for your tenants. We're not slumlords. We're putting together a great product. Whew, it's getting hot in here. Let's talk about some gross yield. And I'll have a sip of water, I think, instead of my tea this time. Gross yield. This is a calculation that we use in terms of working out how strong the rent is in terms of the purchase price. It's a calculation that you'd want to have on hand, essentially, anytime you come across a property, to work out the rent in relation to the purchase price. Nice, easy calculation. Make sure you write this one down, guys. It's your annual rent divided by your purchase price is going to give you, times 100, is going to give you your gross yield. Now, we are looking to purchase properties upwards of 6.5%, 7%, 8%. It's not necessarily about buying them, but it's more about creating them. And that's something you'll learn a lot about on the Cash Flow Masterclass, about creating yield. Because you're creating yield, you're creating cash flow. If we look at this last property, it actually had income of $420 per week. We multiply that by 52, giving us our annual rent. Divide that by the purchase price. It actually has a gross yield, this last property that I just showed you, of 6.5%. That calculation, one more time for you guys. Annual rent divided by purchase price is going to give you your gross yield. The next concept that you're going to hear a lot about when you move into the investing world is ROI, otherwise known as return on investment. Some people also refer to it as a ROI, your return on investment. How hard is your money actually working for you? Now, to get a bit of context as to the concept of return on investment, let's think about if you had your money in the bank. You have your money in the bank, and what are they offering at the moment? 1%, 2%, maybe 2% if you lock it in for 10 years. I don't know, it's pretty crazy the low interest rates you get. Let's say that you had in there at 1%. That 1% is the return that you're getting for your money in the bank. Now, the funny thing is it's actually less than inflation by quite a way, because, well, we know that inflation is at the highest it's been since the mid-80s currently, but also you're then going to have to pay taxes on top of that. So return on investment, if you put your money in the bank, is really not going to be getting very well for you. But when we can go out there and invest in property and create large return on investments, it gives us the ability to make our money work harder for us. And it probably comes back to the concept of not having to necessarily use your own equity when buying properties, because you can account for the equity that you're borrowing by the high return that we're getting from our property. Let's go back to that deal that we looked at before, which had $984 per month of passive cash flow. If we multiply that to get our annual, we're just shy of $12,000. 11,808 to be fair. I have done these numbers beforehand, that's why I'm able to rattle them off. My maths is not that good, but we divide that by 139, which is the money that we've essentially put into the deal. We're giving ourselves an 8.5% cash on cash return on investment. 139 because of the deposit and the renovation. 8.5%. Is that not a whole lot better than having your money based in a term savings? Is that not a whole lot better than actually getting the money sitting in your equity, in your loan? If you could borrow that money, and even if you're paying 4% on that, you're creating 8%. You're making an extra 4% on your money. This is the power of leveraging equity. Understand your return on investment. The calculation again for return on investment is take your profit divided by how much money you've put in the deal. That is going to give you your return on investment. Let's actually have a look at some numbers from the bank. I'm not sure if that's going to be clear enough for you guys, but really we've got some crazy low numbers. Let me quickly give you a couple of them. We got the ANZ offering 5 years at 1.95%, ASB at 2%. I mean, I think it's about time that we put our money into cash flow generating property, because we haven't even taken into account the fact that property doubles in value every 7 to 10 years. We're just purely looking at our cash return for that investment. And this is the power of property. This is the power of being able to purchase an asset that is going to grow. Now, this is where I would tell you that I would be comfortable borrowing money from investors at 5, 10, 15%, sometimes even 20%, because we can use that money in order to leverage it and create a higher return on investment. I'm going to show you one other way that you can create some huge return on investment, and that is by jumping into the concept of trading property. Who loves the idea of being able to take a property, make it all pretty, change its look, and on-sell the property and make a profit? A lot of people love this concept, and it's going to come back down to figuring out what is the strategy that you're looking to take on board based on what is our goal? What are we looking to achieve? When you understand what you're looking to achieve, you figure out the strategy that's going to get you there. If trading is that, bang on. If your goal is honestly to go out there and buy yourself a new Merc, trade a property, make the 80 grand profit, and throw that 80 grand at your Merc. Boom, we got our property. Thanks. We got our car thanks to the property. Now, what I would say is that you're probably better off leveraging that into another property, but hey, everybody's got different goals. So let's have a look at, if we were to jump in and trade a property, how that would actually look in terms of being able to, if I can just find my spot, there you go, in terms of being able to work out what our return is going to be if we were to jump in and trade a property. So I've brought over some random numbers for you in terms of buying a property at $400,000. Pretty standard sort of purchase price that we got there. If you were able to purchase a property at $400,000 and your goal was to make a 10% return on your purchase price. Now, this was actually a minimum rule that I had for myself when I was trading full time, was that I wanted to make a minimum of 10% of the purchase price back in profit. So for this property here, we would be looking at a profit of around about $40,000. If we think back, we're not going to be putting $400,000 into this deal because, oh no, we're using that concept of leverage. We're going to get a loan from the bank or an asset-based lender. So our lender is going to ask for a 20% deposit so you can get out there and purchase this property. So if we're able to do that, you're able to get out there and purchase this property using a 20% deposit. We're going to be using 80 grand to buy the $400,000 property. Now, to keep this nice and simple, what I haven't done is I have not included any reno costs, because that is going to complicate things, and I will go through more details during the cash flow masterclass for you guys in terms of figuring out how we actually work out the numbers based on the renovation as well. But if we've got a 20% deposit in this, we've put in 80 grand, our return on investment is not actually 10%, because we've put in 80 grand and we've pulled out 40 grand of profit. That, my friends, is a 50% return on investment. Do you remember I just told you about the ANZ offering 2% interest for you if you lock your money in for, what was it, 3 years? What about if you could trade a property? And what about if you could trade that property in, say, only 3 months? So you buy the property, you renovate it, and you get it back on the market and sell it within 3 months. And over those 3 months, you've made yourself a 40 grand profit based on our 80 grand in the deal. Now, let's have a look at what our actual return on investment is, because let me actually explain this in a bit of way. If you were to put that money into a year's deposit in the bank at 2%, but after 6 months you took that money out, you would essentially be making a 1% return for your money, because it's only been in there for 6 months. So obviously half of 2% is 1, giving us a 1% return on investment. So if we then do the reverse on this one and we go, okay, great, we've put a 20% deposit in, 80 grand, to then go out and pull out $40,000 in 3 months, we need to annualize this calculation. We need to work out, if we were to do this 4 times in a year, based off the fact that we're able to do this in 3 months, we're now talking about a 200% return on investment, 100 times better than your money in the bank, 100 times better than your money in the bank. Who would be willing to do a property transaction for a 200% return on investment? Please jump in the chat. I would love to hear from you if that is something that you think you would be up for, grabbing a property and doing a transaction. Now, yes, again, I'm sure that there's a few of you going, what about taxes? The government will tax you based on the fact that you're trading. Yes, they will. Yes, they will. But they're also going to tax you on your 2% that you have getting from the money in the bank. So it's the same in order to make sure that we're keeping it nice and clear. Awesome. Thanks, CJ. Love it. Yes, 200% epic return on investment. And you can see why people are able to generate income from a property that's going to give them the life that they deserve for them and their family. And that's what it's all about. Now, I talked a lot today about figuring out a strategy that's going to work best for you. A strategy that's going to give you the ability to find your financial goals. A word that you'll hear a lot from us at the Cashflow Masterclass is financial freedom figure. Financial freedom figure is a number that's going to give you the ability to not have to worry about going to work because you have income coming in from your properties. I'd like to share with you a diagram that I've created, which is basically the pyramids of property investment strategy. And right at the bottom there, we have owning your own home. That really is the basics of owning a property. It's not necessarily an investment. I've seen especially some of those new builds that people are buying. That is definitely not an investment, but hey, we're lucky enough we've had some growth. But it does give you the ability to get into the property market and enjoy the fact that we are getting, exceptional growth recently, but on average, property has doubled in value every 7 to 10 years. And this is going back hundreds of years, this statistic. So it is very, very certain that you're going to get some level of growth over a period of time. But again, owning your own home really is the base level of the investment pyramid. The next level up we look at is a buy and hold strategy. Now, within the buy and hold strategy, there's different ways that it can be looked at. This is very on a holistic, high level element, and we go to a lot of detail during the Cash Flow Masterclass on some of these elements. Buy and hold really is the concept of buying a property with the concept of looking to hold it for a long period of time, creating income over that period, which is going to create your cash flow. Incremental gain over a long period of time and the value, but cash flow as well. And on top of that, rents don't stay the same. With inflation, rents are going to rise as well. So definitely is a great place to be. And I know that for a lot of our clients, they've had exceptional results in creating huge amount of cash flow from their buy and hold portfolios, which gives them the opportunity to live the lives that they deserve. The next level up really is the trading flipping concept. When we go out there and we jump into properties that we're going to flip around, again, like I just showed you, we're talking about what was that, a 200% return on investment. Yes, that's right, 200% return on investment. Trading flipping is a great strategy, but it's not necessarily the right strategy for you. Because for you, if it's about creating an income that can start to support you, to support some extra income for your family, which gives you the ability to potentially, let your wife take the opportunity not have to go to work so she can look after the kids. That for me was one of the most exceptional things about being able to get into property and being able to give my wife the opportunity to spend those early years with the kids growing up. It's so powerful what property can do for you and your family. The next stage up is the multi-income. Now, this multi-income really is where we start to get into huge yields, high yields. We're getting properties that are creating multiple levels of income. So units, boarding houses, sleep outs, additional dwellings, multiple levels of income coming in on a property, going to give you high cash flow, in turn giving you a nice high yield. And top of the pyramid, there is developments. During the masterclass, we've got an absolute treat for you, and I'm going to drop it now, even though I thought I wouldn't. I would tell you later. I've got a guy coming in to present to you guys developments who is our development expert. He's done over 700 homes. That's right, 700 homes. And Paul is the most amazing person. I can't wait for you guys to meet him on the Cash Flow Masterclass. Anybody that's in the chat that knows Paul, please let everybody know how amazing Paul is and the amazing energy that he brings and his absolute passion for helping people. So I can't wait for you guys to meet Paul on the Cash Flow Masterclass. Right. Here's a little concept. Here's a little quote that I came up with in the last couple of years. Because it's essential not just to buy off a plan, but it's essential to have a plan. It's essential to have a plan in place for going out there and purchasing your properties. Because if you have a plan in place, it's going to help you to achieve those goals that you're looking to achieve as soon as you possibly can. Now, buying off the plan really can work in certain circumstances, but it needs to be the right strategy to get you to your financial goals. And we can cover that in a lot more detail in the Cash Flow Masterclass and make sure you guys are up to speed on that. But the basic fundamentals in terms of creating equity is the concept of adding value and buying below value. There's two elements I want you to write down there. Buy below value and add value. If you take these two concepts together, we're going to give us the ability to create equity. Let me show you a bit of a slide that's going to explain that in a bit more detail. So first of all, buy and add value. Buy below value, buying a property that is going to be below its market price. This is not necessarily always going to be the case, but you're then going to go out and then add perceived value, in turn creating an equity gain. The students that I work with, there's going to be rules attached around how much equity gain you're going to want to achieve in order to make sure that you continually grow your portfolio. So we're going to look at a equity gain. And then at the end of the day, it comes down to two elements. Revalue and refinance to buy again, or sell and make a profit so that you can buy whatever assets you would like to buy. Maybe not assets, maybe that Mercedes is not quite an asset, but gives you the ability to go and make chunks of cash along the way and potentially make that 200% return on investment. What I'm really looking forward to as well as during the Cash Flow Masterclass is being able to share with you guys how you can make an infinite return on investment, essentially meaning that you are going to make return with having no money in the deal. Can't wait to share that with you, and we'll definitely be touching on that in a lot more detail. So you may be saying to yourself right now, okay, Jono, that's great. You mentioned the concept that you want to add value to the property, but how do we go about adding values to the property? Well, I've actually come up with 10 ways that you can add value to a property, and make sure you grab a pen and paper and write these ones down. First of all, make sure that you look at the ability to do cosmetic renovations. This is all about being able to add value through cosmetic looks. The concept I love is adding lipstick onto a pig, make it look pretty, and increase the value of the property. Structural renovation, we're now talking about changing the layouts of properties, changing the walls, adding to the dwelling. Extensions, obviously this here again comes under the structural renovations, but extending on the property as well. Definitely something to look at. Conversions, we're now talking about changing from commercial to residential. We're talking about converting garages to residential, which in turn is going to give us more yield on our properties. Change of title, potentially a leasehold to a freehold. If some of these concepts are not quite making sense, don't worry, we will go into a lot more detail. Adding dwellings, subdivisions, consents on properties, getting a resource consent is going to add value to the property, the usage of the property in terms of, again, commercial versus residential, and driving and making sure that the property is getting market rent. That there, it's always surprised me how many properties we come across that are not rented at market rent. Us Kiwis are nice people. We like to make sure that our tenants are looked after, and believe me, I'm fully for that. But I'm also fully for making sure that the property that you're renting out is at market rent, in turn paying rent that's fair for both parties. So once we understand the ability to add value to a property, it's going to give us the ability, like I mentioned, I would tell you when I mentioned earlier today, is that it's going to give you the ability to take the equity that you create and then go and buy another property, another investment property. We don't have to go out there and buy 50 properties. We have students that have come along that are in that space. You don't have to do that. I'm definitely not one of those. I don't want 50 toilets to fix. I would rather get to the stage where I've got enough income to support my family to make sure that I'm financially free. And then I'm able to educate and guide people on how they can also achieve that financial freedom. Because once you've created the equity, once you've created the knowledge, then the knowledge is able to be leveraged. Because the leverage is such a powerful word. And this is probably what sets property aside from any other asset class in terms of investing. The ability to put a small pot of money in and be able to buy an asset for a large amount of money. The concept of leverage, put a 20% deposit in, buy a property that's still at 100% value. We're talking about going, okay, $1 million property, you put $200,000, you've got $1 million asset that's growing at whatever value, and also gives the ability to then go in there and force the appreciation. I mentioned knowledge before. It's scary getting out there and buying your first investment property. I know. I remember the time before I got educated, going out there and trying to find a property. It is scary writing up those sale and purchase. It's scary dealing with agents, but when you have the knowledge, it gives you the confidence to get out there and be able to do it correctly and make sure that you're getting yourself into the position to be able to grow as investors. Imagine what we could share with you. I've had 45 minutes with you guys to share as much knowledge so far, and I'm sure that you guys have taken a lot away. I mean, how much have you been able to take away in a short time? Imagine what we could teach you guys within 3 days. And I guess, again, it comes back down to a word that I absolutely love sharing, and that is all about cash flow mastery. If you have a look at this, on the left-hand side there, we have E&S. E&S standing for employee and self-employed. Employee and self-employed. This here means that you are trading your time for money. If you are trading your time for money, you're going to have to keep working every day to keep affording the living expenses and going about your day-to-day life. But what we want to do is we want to help you transition. We want to help you transition from the left side to the right side. We want to help you transition over to the right side, which is the business owner and the investor. Business owners leverage systems. Business owners have systems that are going to create the ability to grow income for you. This is about having properties that are going to be paying for you, putting money in your bank account. This is going to be your cash flow. Systems in terms of property managers that are going to manage your property. Power team members, we're talking about mortgage brokers, accountants, all the power team members around you that you need in order to run your business successfully. And obviously investor. is something you certainly want to look at. All right, because I have just spoken full on for the last 45 minutes, I'm going to take a quick short break by bringing on, I'm not even going to leave you, I'm going to keep talking, bringing on someone who I'm really proud to be able to jump in and join us today. You actually saw his deal earlier today when I showed you that property and that was purchased in September. That was Nimesh's property that he purchased, and I've got him to join us today. And let's make sure that this is all working correctly. Nimesh, are you there? Let's come on in and say hello.
Hey, mate.
Hey, how you doing?
Good, yourself?
Oh, brilliant. Right into it. Loving it. So let's, Nimesh, thank you very much for joining us. I really, really appreciate you taking the time to jump in and share a couple of minutes of your time. But let's start off with the fact is that first investment property was pretty epic. And I got some really cool comments coming through on the chat. I'm not sure if you saw them, but you bought that property and you didn't even use your own equity. You didn't even use your own cash. Is that right?
Yep, that's exactly correct.
Oh,
we were fortunate
fill
enough.
us in. Explain.
Yeah, we were fortunate enough to take advantage of the equity in my parents' home. And that basically meant that there was no money down in the deal. We leveraged the bank's money, partly what I could get and partly what my parents could get on the equity. And ultimately are fulfilling my parents' loan and my loan and cash flowing great amounts of money from it.
Oh, I love it. Even though I already know that. I mean, how cool is it that you were able to leverage equity in your parents? They were willing to help you to get onto the property ladder, leverage the equity in order to buy a property that's now cash flowing you. You know, we're talking about, $1,000 per month on that $335,000 unit. And you were able to actually buy 3 of the units?
2 of the units.
2 of the units. How brilliant is that? So there's a couple of those, that's $24,000 of extra income in your back pocket every month, which is really, really cool. And I love the fact that because you bought a high yielding property, that extra income was able to support the mortgage that your parents had on the property as well. Is that correct?
Yeah, they don't have to put a drop of their own money into any of that, any part of that, really.
Brilliant. So essentially for you, it's an infinite return on investment. Absolutely exactly. Awesome. Now, do you think you could have gone about that, or your parents would have had the confidence to go about that if you didn't have the knowledge on how to actually pull that all together?
Oh, absolutely not. Like, that first initial step is massive, and having the guidance is absolutely key, because there are a lot of decisions that I wouldn't know what or how to take. And having that guidance gives that little bit of comfort when you're dealing with large amounts of money. So yeah, definitely helps.
Awesome. That's great. So lastly, before I let you go, everybody here is probably considering the masterclass. They're about to hear how crazy cheap. I won't tell you how cheap because you'll probably slap me. But what would be your 2 words or 3 words in terms of people considering attending the Cashflow Masterclass?
2 words: do it, and do it. Repeated 3 times.
Awesome. That's 6 words then. Oh, thank you, Nims. I really appreciate you joining us today and giving up the time to come and say hello. And congratulations on that deal. Now, did I know right that you're actually working on another one?
Yes, I am currently working on another one. I was able to refinance on those Rotorua deals and pull out some extra equity to go for another one.
So you're telling me that property you purchased in September is giving you the ability, by adding value, to leverage equity, go out there and buy another property?
Yep.
Stop it. Congratulations, mate. That is sensational to hear. Congratulations to you and your family, and can't wait to hear the awesome stories coming from it.
Awesome. Thanks, Jono.
Awesome. See you, mate. Thank you.
Bye.
All right, Nim's the legend. Now, like I said before, guys, you want to go into your investment properties as though it's never going to increase in value. But we do this by forcing the appreciation, by going in there and using one of those 10 ways that I've shared with you in terms of adding value to a property. Buy property as though it'll never increase in value. But most importantly, I think it's really important that you get out there and you expand your knowledge. We're talking about property that has created 75% of the top 100 list. Property is a vehicle that has seen so many people grow their wealth and be able to create the financial freedom, the financial stability for their families. And at Wealth Mentor here, I'm really, really excited to be able to offer you guys the opportunity to join us at the Cash Flow Masterclass. Like I said before, we are the leading educators in the Australasia in terms of the Cash Flow Masterclass. You want to join us for these 3 days. Those dates again is going to be Friday, Saturday, Sunday, 10th, 11th, and 12th of December. Now, like I said before, I'm going to be offering this to you at a silly price. I would like the team, please, to drop a link into the chat right now and start to get you guys filling out some information to get you guys registered for the Cash Flow Masterclass. That link will be going in the chat. Make sure you click on that link and start filling out the paperwork. While you do that, let me explain to you what we're going to be covering off at the Cash Flow Masterclass. Day one. Day one is about the foundations of property investment. We're going to cover off the mindset in terms of getting your headspace right to become the best version of yourself as an investor. The numbers. I've raced through the numbers. We will take our time. Make sure you understand every calculation in terms of your investing. We will make sure that you understand how to calculate the numbers on a property and ensure that you're getting the best return for your money. We're going to share with you the 8 buying rules in terms of your investing to make sure that you're keeping yourself safe with the knowledge. Buy below value, add value, and we've got 6 more that we're going to be sharing with you. We're going to go deal analysis and market analysis, start to understand the analysis around a property. I'm also going to be giving you the opportunity on day one. Now, this may sound a bit fake, but it's completely true. We're going to give you the opportunity to make money out of thin air. That's right. By buying nothing and selling nothing, I'm going to show you how you guys can make money out of thin air. It is going to be absolutely epic. There's a great comment here from Sarah. Jumping in the first day is absolutely eye-opening. Now, for those of you that are filling out the forms, I'm going to give you a little bit of a tip. When you get down to the spot where it says discount code, I'm going to tell you, because Santa has come early this year, put in the discount code Santa21 and have a look what happens. Make sure you jump on there. Again, the link is in the chat, and Santa21 in the discount codes. Day 2 is really amazing. We love day 2. The start of day 2, we get into the day by playing a property investment game. We actually play a real life game where you guys get to live the life, and I'm not going to tell you anymore, but get to live the life of buying property in a game situation. A lot of fun. We're going to get into in-depth deal analysis. We're really going to understand how we understand the cash flow on our calculations. I'm going to go into detail in terms of finance. How do we ensure that we are getting the finance to trade, to buy and hold, to do our different strategies? In terms of strategies, we're going to cover off the detailed strategies. We're talking boarding houses, we're talking multi-income strategy, we're talking the ability to get out there and do trading. I absolutely love it. On Saturday, I get to do an hour on trading property, show you examples, give you the ideas in the comments on how you can actually get out there and become a professional property trader and make yourself the money that you would like to achieve your financial freedom. Again, the game is really one of the most exceptional bits of the 3-day Cash Flow Masterclass. Day 3, we wrap it all together and we start to show you how you start to build your business. We get into some of the key elements in terms of tax. Like I mentioned before, I'm bringing in a tax specialist. I will interview him. We'll make sure that you guys get all your questions answered in terms of taxes and structures. How do we keep ourselves safe? How do we be the most tax efficient? We also have Paul joining us. The legend himself is going to be joining us to take development strategies, and you guys need to be there to learn from Paul. You're going to learn all about the different power teams, the strategies that you will need to employ. Now, one of the other things that you get is you get a one-on-one strategy session with one of our team as part of the Cash Flow Masterclass. You get to sit down with an educated professional investor to be able to learn from them, and that there is all part of the package. It really is an amazing 3 days. You can see there another comment from James. Here's the team that will be joining me on the Cash Flow Masterclass. Now, you've met that handsome guy in the middle. That there is really, I think insignificant in terms of the rest of the team that will be joining you on the 3-day Cash Flow Masterclass. Here are some of the mentors. We got Kyron, amazing mind. Belinda, unbelievable what she's been able to achieve. And she is a mindset guru. We got Therese and we got Paul. I can't wait for you guys to meet these guys. And like I said before, you get the opportunity to have a one-on-one session with these amazing, amazing investors. And that there is part of the package. Again, that link is still in the chat. Make sure you grab that link, head over to the page, fill it out. Nice and simple. Discount code Santa21. And I'm sure for those of you that have done that already, you would have seen how amazing the pricing is. And to be honest with you, you get the opportunity to spend 3 full days with these leading investors, local deals, doing deals currently, and networking. We've got a great group of people. I've actually spoken to some of the people that are already joining us on the Cashflow Masterclass. Amazing people that you want to be networking with. These are going to be amazing people for you going forward. You definitely don't want to miss this. It's 3 full days completely dedicated to the Cashflow Master, to growing your investment and your cash flow. Definitely want to be having a look at it. Now, let's have a look at what the value of the Cashflow Masterclass is. We get the one-on-one strategy call. Like I said before, you get the opportunity to spend a good 20 to half an hour session with one of our investors to go through your own personal situation. We give you access to your online portal, which you will get there. There's a whole lot of value there, all included lifetime event support. You email our office at any stage of needing support. We will help you out and make sure that you give you the support workbook. And you get a strategy call. So part of this, as soon as you guys have made your, filled out your paperwork, you're going to get the ability to book a strategy call, which is actually going to come through to either myself or Kyron or Carol or Therese, 3 exceptional investors who you will get to actually have a one-on-one conversation with prior to the Cashflow Masterclass, have all your questions answered. And then we usually offer this to you on these webinars at $14.97. But like I said before, I have been called crazy by my team because we are offering it at an exceptional rate. And it gets even better because that price is for 2 people. It's not just for you. You get to bring a friend with you as well at no extra charge. So let's have a look at that now. We've got all this exceptional value in terms of the Cashflow Masterclass, usually at $14.97. You get 2 tickets, so your partner comes along for free. And wait for it. Yes, I am a bit crazy. We are offering it as a Christmas special. Like I said before, Santa has come early at only $195 for 3 full days for 2 people. And if that is still not enough for you to be able to jump on and join us on the Cashflow Masterclass, if at the end of day 1, you're not happy with what you've achieved, what you've gained out of the Cashflow Masterclass, end of day 1, you come to me and at no questions asked, I will give you all of your money back. So it's a money back guarantee, guys, on the Cashflow Masterclass. At this stage, it is a complete no-brainer for you to be jumping on at $195 and joining me. Like I said before, today only, make sure that you use the code Santa21 to get the price for only $195 at right now to claim your place. I've given you as much education as I can in this hour webinar. Imagine what you can learn from the exceptional team that we have coming to you for the Cashflow Masterclass. Again, money back guarantee. That link, can we have it in the chat one more time, please, team? For those of you that haven't grabbed it yet, make sure you open that, because once this webinar ends, the chat will be gone. You need to make sure that you've grabbed that, opened the link so that you can fill out that paperwork. Again, money back guarantee. So at this time, guys, you decide which path are you going to take. Are we going to continue doing what you've always done, or is it time to take action? But growth requires action, and action requires decisions. I can actually see on my phone, a couple of people have come through. The registrations actually do come through to my phone, and it's so awesome to see you guys joining us. I can't wait to join you, to see you join us on the Cashflow Masterclass. Like I said before, your time is now. If you have any questions to be answered, make sure you fill out the paperwork, and that can be answered for you when you join us on the strategy calls. Again, if you have any other questions, our email address. Thank you so much for joining me today. It has been an absolute pleasure to be able to bring you guys this webinar, and I cannot wait to be able to meet you guys on the 3-day Cashflow Masterclass. Guys, have a wonderful evening, and like I always do, like I end every single session with, make sure you get out there and you stay awesome. Good night, everybody, and we'll see you at the Cashflow Masterclass.